I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today we are making an announcement. Beware, interest rates for second homes and investment properties are going up.
Well, usually we like to make announcements that are good. This is like the opposite. Beware. Holy cow. Skull and crossbones. Sorry about that, folks.
So recently, in the last couple of weeks, about March 11th, 2021, the big agencies, Fannie Mae and Freddie Mac, they're the agencies that buy your note. So when you get a conventional loan, they're buying that mortgage. You don't even know about it because it's happening in the background. You know, it doesn't matter what bank is usually doing your conventional loan. They're selling that note to Fannie Mae and Freddie Mac. Well, what's happened is Fannie, we call them Fannie and Freddie, right? Sounds like brother and sister, but they...
Yeah, Mr. and Mrs.
Yeah. So Fannie and Freddie, we just think of them as conventional loan, parents, or these are the buyers of the notes. They've basically said, we do not want to have more than 7% of our book, of our whole pool of loans, be consisted of second homes and investment properties. They don't want more than 7%.
So out of all their loans, if they bought 1,000 loans, you're saying no more than 70 of those loans can be second homes, investment homes.
That's right. That's right. So they buy these notes, and they're buying them from Bank of America, Wells Fargo, Quicken, Chase, all the big banks, all the little small banks. They're buying these mortgage notes.
Wait, what was it before?
There was no limit. I mean, meaning they was kind of just self-regulated by interest rates. There was no.
Okay, I did read one article, and it said that they think it was in the like the mid-teens.
It may have been, but Fannie wasn't. Yeah. They weren't turning away the business. They didn't stop buying them.
Right. Okay.
Yeah.
I didn't know if they stopped buying them or what, but all I'd heard was that they were basically cutting what they're buying on a second home investment basis in half. So, which translates to about 7% of their portfolio.
So what's going to happen is, they don't want to have more than 7%, and what that really means is they don't want more risk for some reason. You can read into it, but Fannie and Freddie are afraid of the extra risk.
Well, now, does it take a rocket science to figure out why they're afraid of it? I mean, look at our market.
Yep. 2021, at the beginning of this year, it is crazy.
Yeah. What are the first properties to go back to the bank? Guess what? Investment properties are. Mm-hmm. And then after investment properties, what are the next ones? Second homes. Which are the ones that are the last ones to go back to the bank? The primary homes. So anyway, this is not accidental. This is not coincidental. They are looking and trying to buckle down. And we're not saying anything terrible is going to happen, but this is one small indicator that the winds are picking up a tiny bit.
Yeah, and what this means for you is the banks who are giving you the loan, they have to go and sell the notes after you get your keys and you get your investment property and your second home. They have to go sell that note. That note is going to be harder to sell, and they're going to have to actually find some third-party institutions to maybe buy that. So they're actually increasing the interest rates on you. So your interest rates that you're going to be paying on second homes and investment properties, each bank will have different adjustments that they're going to be adding. We're seeing almost all banks, all banks that we have been working with have this extra adjustment on investment properties, and most of them have it already applied on second homes. So it's coming.
Okay, so you're telling me that if we get a loan that is done by ABC Mortgage, and that ABC Mortgage plans on selling it to Fannie Mae and Freddie Mac, you're telling me that now ABC Mortgage might not be able to count on Fannie and Freddie buying that loan. And because they can't count on Fannie and Freddie buying that loan, they sweat a little bit more, and they've got to have a backup plan. And part of that backup plan is, they're going to charge a little bit more for that loan in case it takes them longer, or they have to go to a different place to sell.
Right. And I'm just going to throw this out there based on what I know right now. People might be asking, well, how much more are the interest rates going to be? Well,
because of this move, you will probably see interest rates be on second homes about 0.5% more.
I mean, and can't we say 0.5% to 1%?
Yeah. Yep. So, you're out there looking for a second home or an investment property, or someone's quoted you. Each bank is going to have different adjustments. So be sure to shop around and inquire about, those rates, because this is happening right now. Tom and I, we just wanted to make you aware of it.
Yeah. Okay. And then I think lastly, again, this does not apply to all banks right now. It's most banks out there. I'd say 80% of them. So one of the benefits for working with a broker like us is that we still know a few of those banks out there where this hit has not happened, at least on the second home basis.
That's true, but we anticipate probably we'll be at 100%, right? I mean, in a couple months, we'll probably have all of them. We'll be applying it. But they'll be applying different adjustments.
Yeah, and there can be adjustments, really at any time, during any market cycle. So at this point, this is what we're telling you today, that most of the banks out there have already applied this hit, but we do know, a couple of banks that have not yet. We don't know how long it'll last, how long it'll hold, but as of right now, if you are thinking about that second home, now is a time that is good to call.
Yeah, very good. That's absolutely true.
Okay. Anything else?
All right, that's it.
Okay.
All right, everyone, have a great week.
Awesome week, folks. Take care.
Hey, guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com.